You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody, that music means naught but fun because it is time once again for Education Wednesday. Time for Options Bootcamp, what the cool kids call OBC. My name, of course, Mark Longo from the OptionsInsider.com, as well as from the network upon which all of you are binging. Make sure wherever you're listening to OBC, you're getting the full network. Otherwise, you're missing out on pretty much a dozen other shows coming at you. Crypto, vol, futures, options, active retail, unusual activity, all sorts of fun. TheOptionsInsider.com. You can get them there as well. And if you go there, you can go /pro and check out everything cooking on the Pro, including awesome Q&A/AMA this week. And then, of course, oddities. And the clock is ticking. Only a couple more days to get your name in the hat for the October Pro Trading Crates, which I can safely say not only the Rock Lobster, but Dan has never won either because he is not eligible. Which Dan am I talking about? No, not Dan the Man Gramsley. He's coming up after this show on the Futures Rundown. But the black-hatted one himself, a.k.a. Daniel Geronimo Passarelli III, Esquire from Market Taker Mentoring. Mr. P, welcome back to the show. Did I get it right this time?
You're very, very close.
I knew it was in that range. All the Native American blood flowing through the Passarelli lineage out there, Geronimo. I like it. But yes, the black-hatted one himself joining me as we tackle some of your inquiries. It is time for a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
Dan, that was almost disastrous in the transition there. I almost spilled a gigantic tumbler full of water. Luckily, it's one of those sealing tumblers. I've learned my lesson over the years not to have large amounts of water near all this electronic equipment. That would have been bad, Dan. You might have seen me just go black. And I would have been the black-hatted and black screen one, but we survived. Mr. P, how are things in Passarelli land /MTM land /options income land, sir?
Pretty good, Mark. I wasn't sure when you started on the trading floor. I forgot, but I don't know if you recognize this hat or not. I don't know. Can you guys see it pretty clearly there?
I'm trying to see the logo. It's hard to make out exactly what it says. Oh, it says SIBO, and then it's got purple on it. Oh, so that was that 98. So that was the 25th anniversary. I was down there. Yeah, I remember that time. Yeah. I had just started about a year before or so. My first day on the floor, which was kind of wild, was actually the day they launched the Dow options. So Peyton was there. I think MJ might have been there as well. It was a huge celebrity deal. They were blasting Metallica as soon as you came down to the floor. So I came down the escalator. I was like, wow, this is amazing. They're blasting music. There's confetti firing off. There was, Peyton and Jordan and a huge crowd of dignitaries and speeches. And I was like, this is what a way to start your day. And everyone said, yeah, kid, don't get used to it. And sure enough, it never happened again. But I had an awesome start. I was like, whoa, I could do this every day. Yeah, never again. But one time only, Dan. So I didn't go to that 20. I remember it at the time, I think, because I was still kind of new to the whole game. And they were, I think, taking the dignitaries around in the upstairs on the, in the viewing area to look down on the floor. kind of like you were a caged monkey at a zoo while you were trading, and that was part of the 25th anniversary celebration. I do have, I believe it was maybe the 40th one. We have a painting here on the wall somewhere of like the SPX pit that they handed out. I think it was in our studio bathroom, which has been closed to outsiders now for about 5 years, but we did hang it up there. So if you ever go to the bathroom in the Options Insider Studios, you can see the beautiful SPX wall hanging out there, kind of an artist's rendering of the SPX pit circa sometime in the 90s, I believe. But I don't have that sweet
best
hat.
visual when you're sitting down looking forward or standing up?
I think probably standing up. I think it's near the sink, but I will have to go check to make sure. I haven't been in the visitor's bathroom in the studio in some time, Mr. P.
All right, I'll avoid the fiber and just drink a lot of water.
Yes, there you go. Next time we have you in the studio, you too can check out the visitor bathroom SPX art. Man, we got on a wild tangent there. All right. From bathroom artistry, listeners, and anniversaries out there in the world of options, let's get to some of your thoughts on the pressing issues of the day in the world of options, shall we? And let's kick it off. Listen, let's pay off what we were talking about last week first. And we don't like to get political here on the network. Sometimes it's unavoidable when you have a question like this, which is so caught up in the political debate. It's been kind of almost completely divorced from all sorts of economic reality. But our question of the week last week was, quite simply, there is a debate currently about the independence of the Federal Reserve. Should the White House have more say in Fed decisions or remain as quote-unquote independent as possible? And we put independent in air quotes because we all know at the end of the day, Fed is not totally independent. They are appointed by an administration. And of course, when those appointments come up for renewal, that's when rates seem to hold steady or maybe even, surprise, surprise, get cut. So independence is in the eye of the beholder, but certainly far more independent than if the administration was pulling the strings on every rate cut out there. Now, if you like the administration, if you don't, just visualize perhaps an administration you like better, and then maybe think about them. Should they have a say? And maybe that changes your tune. Maybe it doesn't. But we asked you to keep it as removed from politics as we can. Just straightforward. Do you think any administration should have more input in the Fed, or do you think we should keep the Fed independent? Mr. Dan, I believe you came down on the side of Fed independence when we talked about this last week. We have the results now. Which way do you think our audience went?
Man, I would have to think, and honestly, I think I kind of have to hope a little bit. I don't know. I mean, I think there's lots to talk about here, but I would think that they say independent as well.
We all know what happens when you hope, sir. 99% say no. No, I'm just kidding. Actually, the other way, 89.5% said no, keep the Fed independent. So you're right. Good to see. I think a lot of people at the end of the day, when they've been engaged with markets for a long time, they tend to, whatever your political stripes may be, you tend to have a bit of a libertarian streak beat into you, which is just keep your effing hands off my markets. All you do is screw things up most of the time. And it seems like our audience going that way. Yes, they want a little bit more White House impact, or it should say interference, whatever you want to call it, in the Fed. Only 10.5%, Dan. So definitely our audience siding with independence out there. Be interesting to see what happens going forward. I think Powell's term is up at the end of the year, so I think it's clear this administration is probably going to try to put in a more favorable, even though they appointed Powell, so it's not like this person is a mystery to them. So kind of interesting to see what we get. Maybe some jockeying on the Fed Board of Governors as we get closer to December. We've already seen that. Some people raising their hands to dissent when they weren't cutting rates. Obviously, that was a little bit of campaigning ahead of time saying, hey, pick me. I'm willing to go along with the agenda, which again goes back to the whole, is the Fed really independent conversation or not? But interesting stuff out there, Mr. Dan, last week. This week we have a couple. One was a flash poll we put up, I believe this was on Monday, with the option block. And we ever receive big VIX prints, it always kind of catches our eye. We said, hey, the hot VIX print on Monday, Dan, was 80,000 of the D's 25 calls for $1.28 at the time. VIX cash was definitely sub 25, sub 20 even. I'll have to look and see exactly where it was. I think it was probably vacillating around the 16 to 17 handle. So 25, at least from the cash perspective, the future's obviously a little bit higher, was a fair premium out there. They were trading for $1.28, and we asked our audience, Dan, $1.28, D's 25s, are you a buyer or sold to you? Which way are you going? And this kind of goes back to our earlier conversation, Dan, because one of the speculations floating around out there is all this dust up around the Fed will maybe keep vol a little bit spicier in December than it normally would be. So maybe that's an argument why you might want to nibble on these. What are your thoughts, sir? D's 25s or $1.28?
Oh, goodness, man. I mean, I know what I think and want to say, but it's so what I think and what I want to say is that I would be a buyer of those calls, but I don't know. Like to me, from a valuation standpoint, which, you know, historically option traders don't really focus on that. It's just something that I've been focusing on the last few years a lot more, moving towards more investing land. I mean, the market is absurdly overpriced by a lot of metrics, and it just keeps going. So, you know, what's the John Maynard Keynes quote? Market can remain irrational longer than you can remain solvent.
I thought his quote was kill them all and let God sort them out. No.
Exactly.
I think you're right, actually.
So, I mean, I don't know. To me, logically, buy them is the answer, but I wouldn't be surprised if it ends up, you know, selling them is the answer. I don't know.
Our audience had a hard time making up their mind on this one, Dan. They ended up going out exactly 50-50. Which is kind of weird. We have been seeing that a little bit more often. I think might be a little bit of a hiccup in the Twitter polling mechanisms out there. All of a sudden, we've never saw it usually be 49.9 or 50.01, something like that. We're seeing a lot of 50-50s lately, so maybe there's something going on. Maybe they're secretly rounding, Dan. I don't know. But 50-50 exactly between buying and selling. This one doesn't surprise me as much because our audience, there's an argument for both sides. I can see arguments for both. I just checked while you were talking, Dan, and these D's 25s are bid out. They're $1.36 at $1.43 right now, even though they're down about 12 cents. So they were trading around $1.50 just earlier today. We have VIX cash popping a little bit today, about 16 3/4. So that's obviously could account for some of that, but interesting stuff. So at least for right now, the right answer was buy them, listeners. And again, are you buying that argument that maybe all this back and forth over the Fed will lead to a little bit more juice in December? I mean, December, seasonally, normally not a time you want to buy some vol and have it in your back pocket, but maybe this cycle will be different. Looking at our chat right now, Dan, we got a couple of votes for want to buy them. Option Guy wants to buy them, and so does Nickel. So there we go. We got some buyers in our chat, Dan. So there you go, listeners. Well, you kind of missed the boat now, but if you wait a little bit, maybe you can get them back down to that $1.28 price out there, Mr. Dan. And speaking of crazy valuation, it's wild, Dan. It's wild how you give me the perfect segue sometime out there, because that is the subject of our actual question of the week. Just went live earlier this morning. Something came across our radar. I think it might have been during our pro Q&A earlier this week, or maybe it was even on the option block on Monday. But then the subject of the PE of the S&P 500 came up. And we did a little digging during that show, and we saw that, I mean, we knew it was high. The question was how high. And it broke through the 30 handle back in August, and it, by some measures, is north of 31 right now. And, you know, long-term average for this PE, usually somewhere in the ballpark of 15 to 16. So you're talking nearly 2x the long-term average of the PE ratio. Even if you want to say things are lofty, maybe you have a higher PE around 20. It is still 10 points above that. So by just about any metric, the PE ratio of the S&P 500 is pretty darn high right now, listeners. We have seen this level a few times before. Maybe not a good argument for the bulls, Dan, because the last two times we saw these kind of lofty PE levels was in the great financial crisis around 2008. Obviously not a great time. And of course, before that, it was the dot-com bubble, sir. So again, not exactly two precedents you want to have in your back pocket if you're a hardcore bull like our buddy, Mr. Uncle Mike. Which raises the question this week, Dan. Do these lofty PE ratios concern you? We gave you 4 choices this week, Dan. We have the straight up, yes, this is crazy, or no, who cares about PE? That's old. That's antiquated, Dan. We don't talk PE anymore. Or no, you don't care because AI changes the game entirely. And there are some people making that argument. The productivity gains and everything else maybe can substantiate a higher PE level, and maybe the old school PE no longer applies. Or maybe, Dan, you're a little concerned about it, but you're just whistling past the graveyard because, hey, why not? It's been working so far, right, Dan?
Yeah. I like the whistling past.
Yeah, whistling past the graveyard is crushing it right now.
I know. I mean, you know, I want to talk about each of these choices, if you don't mind. the who cares about PE? Like, yeah, in situations like this, nobody cares about PE. And I mean, we can lump B and C into the same basket here. No, AI changes the game. Like, it's different this time. Like, people always say this stuff, and then
Didn't they say that about tech in 2001? All the tech changes the game, better productivity, right?
Yeah. But it always goes back to what has worked for, you know, hundreds of years. And I mean, literally hundreds of years. I mean, when did Benjamin Graham wrote The Intelligent Investor in what, the 1930s?
He's the one who said kill them all and let God sort them out. It was him.
Yeah. I mean, like, it's pretty straightforward math when it comes to valuations, and it never changes. We just get bubbles and people whistle past the graveyard. That's a new phrase for me. I might have to steal that one. I might have to use that one a little bit.
I single-handedly came up with that. No one else has said that before me today, sir.
So, yeah, I mean, it's definitely crazy. It's just, do you want to pretend it's not? And what is your reason for pretending it's not? Or do you just, you know that it's crazy and still just go with it, which was the right answer, apparently. But, you know.
Yeah, if you've been whistling, first off, your cheeks must hurt over the last 4 or 5 years. And B, you're doing all right. The whistlers are making out right now. Let's see, what do we got here, Dan? Oh, Dan, right now our audience seems like, and this is maybe not surprising either. Our audience tends to skew a little bit cynical, dare I say it, a little bit bearish. And right now, 41.7%, Dan, agree with us. They say, yeah, this is crazy town out here. Then we have a tie for second place. The two no's taking it, Dan. No, who cares about PE, 25%. And no, AI changes the game. Actually, just ticked as we're talking. Now it's 50% say this is crazy. And then 21.4% each for who cares about PE and AI changes the game. So before, if you added them up, the no's were about 50% exactly. Now they're below it. Now this is crazy is taking it. 7.1%, Dan, right now are whistling past the graveyard. So again, yeah, you can't argue with the whistling trade. Whistlers are crushing it right now, Dan. Speaking of crushing it, Dan, you always crush it when it's time for the market taker question of the week.
And now, it's the moment you've been waiting for. It's time for the Market Taker Question of the Week.
Of course, as we're recording, Dan, we got the news coming in. Of course, it is Fed Day. Always seems like it's Fed Day here on Boot Camp. And surprise, surprise, a Fed did their dancer, a quarter-point cut out there. No real surprise. So, yeah, I guess just adding more fuel to the speculative upside fire that is the market right now, Mr. Dan. So I guess if you have thoughts on that, have at it. And then B, what's lighting up your tape in MTM land right now? What do you want to share with the folks? Is it all about your whistling technique as you walk past the graveyard?
Here. Okay. So I got two questions to me. So let's start with the market taker question of the week. So this is a lot of times with the market taker question of the week, it's a question that somebody asked me during the week. But this is going to be a question that I've been asking and answering to and from myself for probably the past 6 months now, as I'm working on my new book, which is all on covered calls, which is, you know, kind of an options investor technique. And the question is, do option traders, how do I even phrase it? It's my own question. You would think I would know. How do option traders need to use fundamental analysis, and how much, if so, or can we just stick with technical analysis? And
appropriate for a day when we're talking about PE, sir.
Yeah. That's what made me think about it. So I think option traders tend to stick with technical analysis, and that's okay. And it's probably best that way, because fundamental analysis, well, the other side of that is I think options investors benefit from using fundamental analysis. And the thing about fundamental analysis, sort of the question, well, the theme that we were talking about here so far on the show today. The thing about fundamental analysis is that it's for a longer term horizon. It's really kind of all about that question that Mark put up for the question of the week. I mean, sure, it's obvious. I mean, well, I don't know, just some people who answered differently, so I guess I shouldn't say it's obvious, but I mean, to me, yeah, it's like really super crazy. And when that ends up being proven, which it might theoretically never be proven, but I mean, it could be a year from now. We've definitely seen times of irrational exuberance where, and the other way too, when we have these things like the COVID move and the internet bubble and stuff, like when these bubbles burst, sometimes there are stocks that can be underpriced for long periods of time too. And long periods of time can be years. So I think because things like the wheel, covered calls, and cash secured puts are more investor oriented, and a big component of them is owning the stock and wanting to own the stock, fundamental analysis is a good friend to the wheel strategy, but otherwise technical analysis is probably your best friend.
Seems like the cynics are coming out as we're talking, Mr. Dan. Our poll is up to 56.3%, saying this is crazy. 18.8% now for the no's each, and only 6.3% whistling past the graveyard. Got some cynics in our live chat as well. We have Option God saying cutting. I'm assuming he means cutting rates. Cutting when inflation is raging and markets are heavily overvalued is borderline malpractice for Powell. Ooh, strong words out there. I think Powell's kind of, his back is against the wall, I think, right now. I think he's kind of held off the rate cut frenzy as long as he can. But and then we have Nichols saying, just feeding into the bubble. Yeah, there is. We had Scott Nations on the network, I think it was last week, and he was saying, why are we cutting? His inflation is still high, all these other things. The market's heavily overvalued, and we're cutting into that environment. It does seem like an odd choice, but that's where we are right now, listener. Speaking of where we are, let's see what you folks have on the brain right now. Let's go out first to Mr. McMillan dance. Oh, maybe Larry's writing in. What do you think? You think Larry is writing into the show, asking, hey, what are you guys up? What is he asking? Let's see. He wants to know about. Oh, he has a comment. What Larry has a comment for us, Dan, about warrants. He says, "Thanks for talking about GameStop and warrants last week. I also got stuck with some of these things from Game, and I was just wondering what the hell to do with them when I tuned into your show. Perfect timing." So there we go, Dan. We're even helping options legends like Larry McMillan. I'm just kidding. It just says Mr. McMillan. I'm going to pretend it is Larry, though. Why not, Dan?
Why not?
So we had perfect timing to talk about warrants last week, Dan. So there we go. We've often been accused of many things. Perfect timing, not always one of them. But there we go. We got that in our back pocket this week. Let's go out. Another comment or question about warrants. This comes from Let's go CMC. Oh, maybe he's a Niners fan. Maybe he's in our fantasy football league. Let's go CMC says, do Mark and Dan think we'll see more warrants after the recent GameStop issuance? Yeah, we kind of touched on this last week on the show with Mr. Dr. Vix, which if you missed it was a banger. We don't get into warrants really ever on this show, so it was a fun excuse to do that. But I do think we do see fads and waves and trends in the financial markets. They're not immune to like anything else. We've seen waves come around, the SPAC wave a few years ago, and meme stock, I should say, seems to keep coming back every few months out there. So there are definitely trends that play out in the marketplace. A GameStop kind of in the vanguard of the meme stock movement, even if it has fallen off a little bit right now. But if they're doing it, you might see some other firms try this. I don't think you're going to see the big names, your Apple, Facebook, Mag 7, Mag 10 names doing this, because for the reasons we pointed out last week, warrants come with a lot of dilution. A lot of them don't want to dilute their stock if they don't have to. Names like GameStop, some of the cheaper names, they don't care about dilution. They'll issue all the stock they can. That was one of the things that saved GameStop and AMC at the apex of their crazy meme stock valuations. They actually sold more stock, and that helped keep them afloat. So they're not as concerned about dilution. So a few people might see these and might see that it's been a decent outcome for GameStop, and they may decide, hey, we don't care about dilution. Damn the torpedoes, full speed ahead. We're going to have some warrants as well. So, Dan, I wouldn't be surprised to see a few more maybe smaller meme-type names try this out. What do you think? More warrants in our future, sir?
Yeah, I mean, I would not be surprised if we do have not a major wave of a bunch of companies issuing warrants, but I would not be surprised if we see some of it. And I mean, I say that, I mean, not cynically. I mean, I really think that, but most of the fundamental like experts that are thought leaders in fundamental analysis, excuse me, I mean, they will caution investors about companies that issue warrants because it is a dilution of shares, and it's kind of one of these gimmicky things that people, companies will do that probably benefits their board and their C-level managers more than the mom and pop investors. But I mean, that stuff like that doesn't stop the market from jumping on board. Like you mentioned SPACs. I mean, I don't know. I was involved in 2 SPACs, and they were definitely on the later spectrum of the whole SPAC wave, and got my butt handed to me both times. The one was definitely just a freaking scam. And the other one, I don't know. I mean, I'm still in it, and I'm wondering if it was a scam. But, these things historically, when we get some of these fads, it's not just the dumb newbie retail people who get caught up in it. It's everybody. Like, man, don't you remember the internet bubble, the .com bubble, where you had these analysts from the major banks saying, oh gosh, yeah, this stock, it might never have earnings, but oh gosh, we're a buy recommendation. And then a year later, the stock is bankrupt. I mean, people get caught up in this stuff, man.
Starting to see that now. NVIDIA announces it's spending more money yesterday, and the stock goes up. AI companies, when they spend money, their stock goes up, Dan. Talk about flying in the face of fundamental analysis or even reason. So, yeah, we're seeing that to me is definitely the hallmark of a speculative bubble. Oh, they're spending a ton of money, billions. Got to rally the stock, right? Well, why else would you? What else would you do, Dan? Our chat is very impressed that Larry McMillan is writing into the show. They're like, oh, Larry writing into the pod. Nice. They're very impressed. Let's get out of here from Rich Anderson. Oh, maybe it's Richard Dean Anderson of MacGyver fame. I'm going to pretend that too. So we got Larry McMillan and we got MacGyver writing into the show as well, Dan. So we got a hot listener mailbag this week. What does MacGyver want to know? How to escape from terrorists and build a portable helicopter using only chewing gum and glue? No, he has a more mundane question, Dan. He wants to know, I know the show is called Options Bootcamp, but either of you guys trade futures? If so, what? Well, good timing on your question, Mr. MacGyver. We do have a show all about futures coming up right after this one on the network. Yet another reason if you should be hanging out in the Pro, you get it in your ear holes right away, or you should definitely be subscribed to the full podcast network, because that will be hitting the network later today after OBC hits. So if you want a taste of futures, and if you want a guy named Dan talking about him, I will be joined by our buddy Dan Gramza over there. So if you like your Dan Squared days, then Futures Rundown is your huckleberry. And, I resisted for a long time, Dan. I resisted adding futures-oriented content to the network. I just wasn't sure if it dovetailed well, but the response has been great. It's been fun for me, too, because I've always been a futures dilettante, a dabbler. I never really spent a lot of time. I'm more on the options side, and especially if you're going to do futures, it's a lot of intraday swing trading. You need to be on it all day, and I'm talking to you all day, Dan. I don't have time to be slinging my intraday E-mini and everything else. I am intrigued by them, and certainly it's been fun to sink my teeth on the show into a whole bunch of weird esoteric products I never really looked at before or traded. You get into some of the weird reasons why, WTI is the size that it is, or soybeans or other things because they can fit in a train car. All sorts of weird minutia pops up in the futures markets. That's been kind of fun for me. But as I mentioned on our Pro Q&A earlier this week, Mr. MacGyver, a lot of the intraday stuff, I've kind of weaned myself off it just because I'm here doing shows a lot, and I want to make sure I'm not Dan. I don't have the Bing going on in the background every five. Oh, I got to go do that. And then there's 5 minutes of dead air on the show. So I try to do stuff that is at least a little bit longer than intraday, which is why I'm not slinging a lot of zero DTE options right now either, which is kind of the flip side of the intraday future side. But I am very much futures curious. We have been doing a lot of digging into some fun products on the Futures Rundown, and I would expect more of that to continue. Mr. Dan, I know you have a work wife, a better half, who has been on our Futures Rundown, who talks all about futures. So there is some futures action over there at MTM, sir. What are you guys up to?
Yeah. John Seguin, he's our guy who works with a lot of futures and ETFs. He's got his own daily class through Market Taker. He's great. He really knows his stuff. Me personally, I often threaten myself that I'm going to start trading futures.
You wake up in the morning, you smack yourself in the face. This is the day. This is your punishment. You have to trade an E-mini future.
But, that's been going on for probably 10 years and still never, my account isn't even eligible for futures. I mean, I have traded, I've traded them before. First of all, I traded corn options for a couple of stints in the pit. And I actually was in name only a professional futures trader for about 6 weeks, but I never got good at it. I stood in the soybean futures pit and traded, and gosh, if I broke even, I'd be surprised. I honestly don't recall, but yeah, breaking even would probably be the best I did there. So, I've got experience with it, but yeah, just like you said, you're doing stuff all day, you're talking, you're doing shows like this, same, and it's hard to do futures in that case.
Dan the Corn Guy. Wasn't that going to be the name of your website originally? DanTheCornGuy.com. Then somehow it became Market Taker instead. But for a lot of the audience of this show, and this also is something we addressed on the Pro Q&A earlier this week, for a lot of the audience of this show, a lot of your main use case for futures is taken up by other things now. Like, for example, a lot of the intraday crowd has migrated into the zero DTE options. If you wanted to, really be slinging the S&P intraday, and you wanted a little bit more than a Delta One product, the zero-day options have you covered there. So that's been cannibalizing some of the intraday flow from the big index futures. And we were talking about products that are hot right now, like gold. A lot of people are into precious metals right now, and you have some great surrogates on the securities side. You can go GLD and SLV. They hold the physical. They kind of eliminate all of the concerns you have with a lot of these other products, that have roll yield and everything else trying to replicate a future. They don't have that because they hold the physical. They have a liquid options market. So for a lot of people listening to this show, if you want to trade intraday on the indexes, you can do that with zero day. If you want to trade the precious rally and the moves right now in gold and silver in particular, you can do that in those products. So for a lot of them, most of those needs might be covered outside of the futures realm. That said, if you want to go deep and you want to really sling some Delta One, you can't do worse than futures. And they're getting pretty aggressive with the intraday margin now. So if that is intriguing to you, listeners, again, I encourage you to subscribe to the full network, and you can get the Futures Rundown right after this show. Dan, what a deal.
Yeah, 2 for 1. And Grams is always good to listen to. He's a smart dude.
Terrible, horrible human being, that Dan. Might be the worst guy I've ever Oh, did I say that live on the air? I'm sorry. Actually, he's about the nicest guy. He doesn't seem like it should be in the Futures game because he's way too nice. I met a lot of Futures guys. They seem to have some rough edges about him. And, Dan is kind of the exact opposite of that. So, yes, stay tuned for that. This Dan has some rough edges, too. Oh, by the way, our chat's very excited. We have MacGyver now, too. So they're all hyped on our guests this week, Dan. A.K.A. Dan Geronimo Passarelli. Keep getting those middle name guesses. We'll get it one of these days, listeners. Daniel Guantanamo Passarelli. How's that? There we go, sir.
No G's. Does not start with a G.
No
That's my
G.
only clue.
My next guess was Giordano or Giardelli, so none of those are going to work either. I'm very food-based on the G's, right? I guess I'm hungry for lunch. But Mr. P, if folks want to hit you up and talk anything MTM or maybe talk some futures, you got that there, too. Where should they go? What should they do?
Yes, please. Come on over to, well, actually, you know what? We've been talking about fundamentals and stuff. Head on over to my Substack, which you can get to most easily by going to markettaker.com/Substack. That'll take you right to our Substack homepage. And I write a pretty much weekly article. I actually missed it last week. Sorry, folks. For our paid subscribers, but there's a lot of free content there too. So yeah, come on over to markettaker.com/Substack. Talk tons about the wheel and investing and do that.
You should just change it to thewheel.com. I'm sure that's not taken, Dan. I'm sure that's freely available for you to go pick that up right now. Check them out, markettaker.com. Don't forget the second T for Theta listeners. Oh, I lied. We're not done yet. We have a suggestion in our chat, Dan. We've been doing a lot of these Vol death matches, and we're doing the second one coming up soon. It's going to be, the first one was Russell versus Mr. Jim Carroll, the Vixologist. Next one's going to be, I think, Henry Schwartz against Scott Nations facing off in the Vol arena. We just had a suggestion in our chat, Dan, for a Dan versus Dan death match. There can be only one Dan. What do you think?
I think Grams, doesn't he have a black belt? I think he might. Well,
Does
actually,
he?
I do too. I actually, this is some trivia. I actually earned my Taekwondo first degree black belt, but that was a long time ago.
You're like first grade or something?
I was in college, but that was still more than half a lifetime away.
My son used to do the karate thing too, and it seemed like when he was younger, and he got a grade promotion whenever the sensei needed to put a car payment down. He was like, "Oh, we need new belts. You got to buy a new belt for your kid." Now he's blue, now he's purple, and all of a sudden, my kid's flying through the ranks, and I was like, "Wow, is he really that good?" He needed down payment for something, so the kid was flying through the ranks.
Yeah, Master Kim, I like your new Ferrari.
You want to buy a black belt? Only another couple $100. There we go. So yes, amazing how that worked, the correlation there. But there you go. Maybe we'll have a Dan versus a Dan death match. There can be only one Dan. Or we know what we really need to do. We need to have you versus Uncle Mike. We really need to have it out. Just Nemesis versus Nemesis death match. There's certainly a lot to go there as well. I think you're kind of cynical on the market. He's Mr. Permabull. He still owes you $1, I think. There's a lot we can get into, I think, on that one as well. So I don't know. Maybe got some more grist for the death. Maybe we'll expand beyond the Vol Oeuvre and just have all sorts of death matches. Dan, what do you think?
I don't know. Can you welch on a death match? Because that would be my concern.
If it's 2 men enter, 1 man leaves. Those are the rules of the death match, sir. You haven't seen Dr. Vix in a while, have you? He lost his death match. He is now dead. So there you go. Yes, those are the rules. Listeners, let us know if you'd be down for a Dan versus Dan, or just a maybe Dan versus Uncle Mike death match. Maybe we can make that happen. We're also going to make the Futures Rundown happen in a little bit after this. If you're hanging out in the Pro, stay tuned and keep those great suggestions coming. Those are awesome. And then, of course, join us after the closing bell today for the Hot Options Report. We break down all the action in the options market today. Then back again with our usual array of content, including our buddy the Flowmaster joining us on the option block tomorrow, one half of the upcoming Vol Deathmatch 2.0. And then, of course, Friday Vol Views with the loser of the previous. Yes, I guess he is still alive. He's on life support. Mr. Dr. Vix will be joining us on Friday with all sorts of special guests to talk Vol. Then back again next week, all the way to next Wednesday. Another episode of Options Boot Camp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.